What's good, everybody? Welcome to today's video. So today we're talking about SMT divergences. If you've been in any of my live streams or my trading Discord for the trade breakdowns, you'll see me talk about it a lot. And it's a really strong confluence you can add to your trading. So let's get into the breakdown of what an SMT divergence actually looks like. So, shut up, phone, you're ruining my video. So, an SMT divergence occurs when you have uncorrelated price action. So in this example, for a bearish SMT, oh my god, one moment. Sorry about that. I should have done that before I started this video. Stupid. Right, where was I? Bearish SMT. So they occur when we have uncorrelated price action. I've completely forgot where I was talking. Fuck's sake, man. So yeah, we see NQ push up and take out these highs, but ES didn't. It had already started moving down, while NQ was pushing higher. Because the pair are usually correlated, what can we expect to see? We can expect to see NQ start to follow ES. So let's go over that again. ES fails to make a new high, NQ makes a new high. ES is already pushing down when NQ is making that new high. So what can we expect? We can expect NQ to follow because they are always correlated. Well, not always correlated, because obviously you need uncorrelation for an SMT divergence, but they usually follow each other. So for a bullish example, we see in this chart, this little drawing, ES continues to make higher highs while NQ makes a lower low. So what can we expect? We can expect NQ to start pushing up and following ES in the same direction. I hope that makes a bit of sense. I've really messed up my fucking words there. Basically, you want to see either one of the indexes making a higher high while the other fails to make a higher high. So let's get into an actual chart example. It'll be a bit easier on your eyes than my shabby drawings. So today was a perfect example of this, and I'll show you how we can enter this trade as well. What we see on the 15-minute is ES push down, grab all the liquidity at this 12-minute candle, and create a new low. On NQ, we didn't see that lower low being made. We saw higher highs. So what can we anticipate? We can anticipate ES is eventually going to start making higher highs again, which is exactly what it did. Try and make this as clear as possible. If you look here, this is the 12 o'clock candle. ES at 3 o'clock comes down, makes a new low below this candle. If we look at NQ, 12 o'clock, we see the 3 o'clock candle never pushes down past the 12 o'clock candle. So that is our divergence in price. We are seeing NQ pushing higher while ES is pushing lower. Got it? Sweet. So how can we use this to enter a trade? Why does it add confluence? So obviously ES wanted to follow NQ and go higher. So what we can do is, after this SMT is formed, we can go into our lower time frames. We've already swept out the liquidity, so we have enough momentum in the market to push higher. We go into our lower time frames and we look for our inverse fair value gaps, break of structure, fair value gaps to enter off of. So what we see is this huge 1 minute candle get inversed. So this is now an inverse fair value gap because we broke the bearish structure. There's no bearish order flow coming into this candle. from this fair value gap, sorry. And in turning this fair value gap to an inverse, we see multiple breaks of structure to the upside, confirming that price is wanting to push higher. We have a break of structure here, and we have another break of structure here. After this break of structure, we see a fair value gap form. Price comes into the fair value gap, it ends up respecting it, pushing it out, and then once it's respected, we can look for our buy positions, which would be entering on the candle when we respected it, stops at the low, targeting a higher time frame draw on liquidity, such as these highs here. Oh, I fucking moved it, haven't I? Nice one, you dickhead. Such as these highs all the way up here. I think that's the best I'm going to explain it. I'll go over it one last time. We want to see uncorrelated price action. So we want to see one of the pairs making either we'll use a bullish example for this. So we want to see one of the pairs making a new low while the other is still making higher highs. For a bearish example, we want to see this here. We want to see one of the pairs making lower highs while the other makes higher highs. Understand? Sweet. I think that's the best I'm going to be able to explain it. If you've got any questions, leave them in the comments or message me on Discord personally, and I'll help you understand it a little bit more. We'll jump into some backtesting sessions together or something and try to get this drilled into your head a little bit. Cheers for watching. Have a good one.